Hello, my name is Adam Hark, managing member of Wellesley Hills Financial, and this is another installment of our series where we interview experts in the payments and financial technology space with very specific vertical expertise in certain areas. And today it is my pleasure to welcome Sarah Williams. She has many titles, and I'll let her introduce herself and those in just a second. But before we get going, perhaps just a funny story. Upon my meeting Sarah, I think it was like 2 or 3 years ago at a conference, I think it was in Atlanta. And, I've been doing this for many years as a banker. And someone from my office was kind enough to coordinate a meeting between myself and Sarah. And she was kind enough to accept and accommodate me. And it was probably, in 20 years of doing this, is one of the first times I actually felt on a first meeting a little bit back on my heels. Because as soon as I opened my mouth to inquire about what she does, asked about her company, her expertise, her background, her pedigree, it was just like bang, 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 bang. And, the takeaway was like, wow, I mean, this person really, really knows her work, her industry, the verticals she operates in, the technology, the modalities, the marketplace, et cetera. And so this is not just a run-of-the-mill interview and Q&A for me. This is actually enjoyable. I enjoy all of them, but this one in particular, because she's become a good friend, a colleague. She's also an executive advisor to Wellesley Hills Financial. And I think that anybody who's listening to this and is interested in what is happening in the B2B payment space, I've got the right person, or we've got the right person queued up for you today. So with that, I'll kick it to you, Sarah, for the intro and the background, which I think will help inform the rest of the conversation.
Well, Adam, thank you so much. I had no idea that you would have such a felicitous introduction for me,
I
but
can be charming sometimes.
I appreciate that. Someone coming out of Boston, being charming, it's new for me, but I'm glad to be here. I'm very grateful to be a part of who you guys work with on a regular basis. I too, when we met 3 years ago, thought this is something that someone that's important to know, as well as the rest of your colleagues. As far as my background is concerned, I have been in B2B payments for over 20 years, and I've been in fintech for almost 30 years now. My first kind of start within this, fintech world was with Accenture. It was Anderson Consulting back then, and then I went on to sell mainframes to banks for Unisys. So I have a very traditional background. And then about 20 years ago, when I was approached by a client of mine, actually, a bank partner of mine, and they were just rolling out what they were calling a virtual card. And it was new technology to them. There were some players in the space that already had the tech at that point in time. GE Financial, who was eventually acquired, JP Morgan Chase, who eventually actually sunsetted that product in 2008 when the market crashed, were early adopters of the product. But I actually was signed on then to work for a company called Comdata, which is now Corpay. Most people know them as Corpay. And I was actually the very first person that they hired to sell virtual card. And I had a software sales background. I also had a product background and many other things. So I quickly saw the opportunity. And I also knew that the best way to distribute this payment modality was through partnerships. So fast forward 10 years, when I left what was Comdata, recently acquired at that point in time by FleetCor, now Corpay, my book of business was worth over 50 million in annual revenue. Today, it's worth probably 100 million, if not more. And the reason for that is because I targeted those very specific partnership segments. So companies like AvidXchange were my client. They were a $2 million in revenue company. When I met Mike Prager, quickly we adopted payments and grew them to what they are today, valued over $2 billion. That transaction just went through. I did a lot of work in the healthcare claims payment space back in 2012, 2013. There's a lot of successful companies that we can talk about in that space. And it's a very interesting segment of B2B payments as well, because there were federal mandates associated with changes changes made, as well as true adoption of what people call enhanced ACH. It's really the only sector in America where that's been adopted, and we can talk about that more as well. So my specialty is in working with AP automation companies, other software companies, and helping them deploy a payment solution directly into their product offering. Fast forward to 5 years ago, I founded what's called IronPay. It is my payments company that I have 3 other partners. We offer a variety of modalities. We work with multiple processors, and we can talk about that more too, Adam, as we move forward. So that is my background. Thank you.
Pretty good. As I said, a very impressive pedigree, and your work experience speaks for itself. When we think about B2B payments today, I mean, we're talking about tens of trillions of dollars domestically. Is that what we're talking about in terms of volumes, gross payment volume moving around?
Oh, absolutely. I mean, I don't have the numbers right in front of me, but tens of trillions of dollars. And believe it or not, the majority of that is still being moved via paper check.
That's unbelievable.
Yeah, it is. When I started in this space, it was 90% paper check, and now we're down to about 60% paper check. There are certain segments that are, much more digital than others. There are certain segments that are 100% paper check still, shockingly. There's a lot of noise in the market about this, which, President Trump himself said we're trying to move away from paper checks in the federal government. That caused a lot of awareness around, the issuance of paper checks in B2B. And we've seen a lot of interest because of that. There are other reasons for interest in moving away from paper check, like check fraud, issues with the U.S. Postal Service. This is really the first time in my career that companies are actively looking for an alternative payment modality to check. And then there are new modalities coming out that are allowing for us to replace check much more easily, like lockbox payment networks and other networks that kind of tap into rails that already exist. So we don't have to change the game too much overnight, and we still offer all of the, the benefits of a check, but we're doing it digitally, and we're moving away from the U.S. Postal Office, which is helpful.
So when you think about checks and still how ubiquitous their presence and usage is in the marketplace, I'm assuming that you look at that as an opportunity for yourself for IronPay. And I'm curious because it would seem to me you're the expert. I'm the layperson on this call, but using check is probably more expensive, a lot more friction. Certainly takes a lot more time to clear. What is the explanation for its continued usage? And maybe in explaining that, like maybe there are certain verticals where it's used more than others, and there were reasons for it.
Yeah. I mean, the primary reason was ease of use. It had always been done. It was built into not only their, company's protocol for how they operate, the people they had employed around, the check issuance department, all of those things. It was expensive, but it wasn't so expensive that they cared to disrupt what they were doing in that space. All of the reasons that we often see a company not moving forward with some type of digital replacement when they have more of a legacy operation. Additionally, believe it or not, a lot of companies, especially the companies that we work with that are in fintech or fin in particular, are still on homegrown technology. They may even have on-prem technology with old AS400s or other types of hardware. So it's much more costly for them to consider moving to a different form of payment than paper check if all of their operations are still on-prem. So you think about manufacturing, you think about other, fintech type companies or fin companies, you think about all of those companies that may have more of a legacy background, companies in claims payments that aren't healthcare, whether it's property or casualty or some type of other type of payment that has a lot of areas that, are involved in the adjudication process. So all of those players, the federal government included in that, are still on paper check. Disrupting that was more costly than what we assume industry-wide to be the cost of a paper check, which is anywhere from $3 to $5. If you have humans touching that check, print and mail, cost of postage, it's around that price range. So replacing that with a digital methodology, partnering with a bank or another partner like IronPay to deploy that, it was just too costly until now. And like I said, the disruption in the U.S. Postal Service has certainly been a big reason that companies are looking finally to make a change. AI and other technology that's rolling out is making it easier to consider different types of digital payments, and then newer modalities in general are finally making this something more attractive to companies that have delayed migrating over to digital payments.
When you say new modalities, I mean, are we talking about same day ACH, RTP, real time payment rails, SMS? I mean, are those some examples? Also, obviously, virtual cards.
Right. So virtual cards, like we talked about, been around for 25 plus years. That is our bread and butter at IronPay. We're very good at finding suppliers that still appreciate being paid by a virtual card. Typically, those are suppliers in telecom, utilities, other segments. Just keeping your lights on. It's landscaping. It's fleet services. Those types of companies that all take a card. So we have streamlined how we pay those suppliers so that they receive payment much faster. We've deployed as much benefit to those suppliers with that form of payment as possible in over the past 20 plus years. So we've since moved on to other payment modalities that offer us the ability to digitize payments as well as potentially capture revenue for both us, IronPay, and our clients. If that's an option, or simply lower costs dramatically by moving to a digital payment. So the number one rail we're most excited about, we partnered with Deluxe, and it's called Deluxe Payment Network, DPN, and it is a network of different lockbox solution providers. Deluxe is primarily, that's going to allow for us to send instructions to Deluxe, and they'll disperse that payment to the appropriate lockbox for the supplier, because they have that identified. So it's a way to simply make a payment through a very established network. Deluxe has been around over 125 years. They're adding more lock boxes to their network every day. They have a significant footprint already. They made an acquisition last year that doubled their network, so that continues to happen. So we're most excited about that network. As far as real-time payments, same day ACH, so it's a story we've been talking about in B2B for 20 years, really. How do we make ACH more effective? Yeah, I mean, this is how long it takes in our industry. Real-time payments are still not something that is relevant to B2B yet. It will be in time. I watched it happen, or at least the relevancy of it, during the healthcare claims payments era back in 2012, when it was federally mandated by the Affordable Care Act that if a supplier wanted to be paid electronically, we had to be able to figure out how to pay them electronically. When I say we, I mean all of the primary insurance payers, where United, Blue Cross Blue Shield, Aetna, those guys, and then paying hospitals and providers, right? Then the primary mode of payment that was a part of the Affordable Care Act was ACH, along with virtual card was also accepted. Immediately, a group of us, and United primarily included, did create an ACH network of providers and doctors that already existed. So day one, we went from 0 providers in network to over 1 million providers in network for an ACH payment modality, which was really the first RTP iteration of ACH. All of it was created in 2 years. So we moved at rapid speed. It was federally mandated. We deployed it very quickly. Everyone, and we charged 1%. So it's the only industry where we said, okay, it's going to be 1%, and it was completely adopted by the industry. Since then, companies like AvidXchange and others have gone back and forth in how do we roll out a monetized ACH, and what is the correct payment for that, and how do we connect into suppliers in a meaningful way. 13 years later, it's still problematic. groups like Nacha and others have also tried to make way with RTP and B2B without much satisfaction. There's been a lot more development on the consumer side, and also areas of improvement around wallet and other types of digital disbursements to consumers that are very exciting. And we're actually leveraging where we can, leveraging the technology that's been deployed by Wallet to give us the ability to communicate with suppliers. And that's fairly new for B2B. But the thing about B2B is we're always 5 to 10 years behind any consumer type payment. So we're always playing catch up. But I do finally see in the next 5 years a lot of that catching up coming to fruition. And we're actively doing things like leveraging wallet functionality that typically goes to a consumer to allow for us to make a payment to a company, as an example. Again, trying to move forward with ACH with a fee by sending the right data to a supplier. And we have a couple of different ways in how we disperse that data to suppliers, but there is not a mainstream way of doing that is kind of the accepted norm in the industry yet. I hope that does happen, or IronPay develops it. As of right now, each group, like AvidXchange themselves, has their own network of suppliers, and they're sending that data to their suppliers. They're not spreading that out to others. Others aren't joining that network. So I do see a lot of consolidation in the next few years that will allow for enhanced ACH, RTP, whatever you want to call it, in B2B to become a much more acceptable form of payment.
Just to wrap up the RTP, I mean, do you think that's a supply side problem where basically access is the issue, or is it a demand problem? Like corporates just aren't asking for it?
It's really a combination of both. Suppliers themselves, a lot of suppliers use Ariba, for example. And we've looked at how to embed ourselves into Ariba so that all of the Ariba-based suppliers can receive the data coming from IronPay in one format for all of their customers. But there aren't a lot of networks of suppliers that are accepted like Ariba has. So, companies both on the supplier side and the buyer side have grown individually versus, in unison. Now you have some that have accepted networks through different AP automation solution providers, like I said, AvidXchange and others, but it's just still very dispersed, and we haven't seen a lot of consolidation. We are going to see consolidation in the next 5 years. It has to happen. It just has to happen. Huge opportunity for the fintech players that are here today in this space. That's why I'm excited about what I'm doing more now than ever before. So it's a matter of, the right entities creating the right technology that's going to allow for buyers and suppliers to finally effectively communicate, send that data in a fashion that allows for the payment to be made in real time and also to be auto-reconciled on both sides. Once that's a capability, we will see adoption of that platform, replacement of paper check universally, and I do think this will be the primary modality, whatever we figure out what that looks like and what it is.
You mentioned the adoption rate, I guess, of B2B of some of these newer modalities, and it's much slower. It lags behind the consumer piece. I mean, does a company like IronPay, is it properly positioned in the marketplace? Because I assume, like, by way of example, if you were servicing or providing solutions to an insurance company, they have a lot of payouts to consumers. Is that also a part of your business?
It is not a part of IronPay, but we work with other partners for that offering. And it's very important to us to be able to make disbursements to consumers, especially as we now see wallet as the primary modality that's being adopted in that space. So we have a lot of clients that are in the warranty space or in the property and casualty space, and we then bring them a partner that allows for their consumer-based transactions in those two verticals. We also have other verticals that have interest in consumer-based payments. Again, we'll introduce those partners. Um, Fantastic technology has been created in the last 5 years as far as consumer payments are concerned,
Yeah.
outside of banks, outside of the rails we've seen, or we've all even leveraged, which are also amazing. Zelle is a fabulous set of rails. But what's been created for Wallet is making the ability to disperse payments to consumers so much quicker. It's giving consumers choice that they've never had before. It's very important, like, for example, within our property insurance payers. So, in the past, a consumer had to sit and wait for the check to come in the mail from their insurance company. And then they also had to figure out how to have, whoever they were working with to repair their roof co-sign that check in order for it to be deposited. So with Wallet, we've been able to create a digital platform where the consumer is paid electronically, and we are able to move away from having, the GC or the roofer or any of those parties involved in the cashing of the check. So the consumer experience is far, far better.
Yeah.
And that's in an industry that was very paper check oriented forever.
Yeah, I imagine it is. Um, no conversation, is complete or even marketable these days unless we introduce the topic of artificial intelligence, and in this case, where it is having impact in your business in the B2B space. I mean, I have to imagine that the back office, AR, AP, and ERP is probably where you are seeing it, but we'd love to get your insights, perspectives on that, where it is really creating efficiencies and having like meaningful impact in your line of your offering.
Yes, Adam, I'm so glad you brought this up. AI is having the greatest impact in my industry of anything except the Affordable Care Act that I've seen, throughout my career. The primary area and the immediate area where it had an impact was in the digitization of invoices or any type of document that lives within the AP workflow. Most third-party companies, AP automation companies, and others have already looked at ways to deploy AI to take what they were using OCR for and migrate it over to AI.
I
So
mean,
they
OCR now is antiquated technology, right? It
correct.
can't nearly do as much as AI can, especially AI that can process images.
Yep. So you're looking at 60% accuracy with OCR to 99% accuracy with
Mm.
AI. So that was the easiest and quickest area that we were able to achieve optimization with AI. And then, now we're deploying and others are deploying AI in other ways that are having an impact. Again, we're looking at leveraging AI, the accuracy of that data, and how we distribute that data to suppliers. We were talking about that earlier. We are also deploying
Is
a
that like a when you say that, are you talking about like its ability to enrich or enhance some form of orchestration layer? Is that what you're talking about, or is it something else?
It 100%. So we're looking at AI to displace where we had to have humans involved in services, servicing our customers, and whether that was around supplier communication, it was around again OCR and data accuracy. Um, it was in some other service areas that were very costly for us. Um, and the biggest example of how that is going to have or already is having an impact in certain areas within B2B is by removing that service layer, which is happening today and it's only going to grow. Companies that have been historically reluctant to enter our space, companies like ERPs, maybe some banks, for example, are now seeing an opportunity to really become involved in, not just payments, but accounts payable without the service component. And they're rolling out or actively selling their AP modules with payment provider solutions that we really didn't see them doing in the past. So anyone that was hesitant to get into B2B payments or this area is now, because of AI, the service component's really been removed. They, I do believe, are now looking to enter the market. So that's a big disruptor for all of us involved. But, if we partner with the right people, we'll be a part of it instead of, being disrupted by it.
So when I hear disruption as a banker, to me that is synonymous with opportunity. Do you also see consolidation in that AR AP space as well among those players? I mean, it's very
Absolutely.
fragmented, right?
Yes, because it was created based on the need by each industry. So a lot of these AP automation and AR solution providers were created because people in the construction industry needed a solution. Entities in property management needed a solution, and so companies 25 years ago created software that solved the problems of those particular industries. And then as they grew, they added other functionality to sell to other industries. But it was a very traditional, way of going to market. So now, because the service component can be removed with AI, other things that I've already talked about today, we're seeing a ton of consolidation, not only of AP automation companies and AR solution providers. We're seeing entry into the space, like I mentioned, that we hadn't seen before. A perfect example is Acumatica recently bought an AP automation company. We're seeing more of that from the ERP space. It happened years ago. SAP actually bought Ariba and Concur. Let's see what they do next now. So so many exciting things are happening. I'd be really paying attention if I were you to companies that are being bought, people that are partnering. There's been already a ton of activity in the first half of this year, both good and bad, but it's exciting.
So you think, as it relates to ERPs, they're going vertical now. They're looking to pick up those types of assets and kind of fold them into their stack.
Well, I mean, for the first time, they're looking at, actively selling their AP automation, their AP module, which is set dormant for a very long time and they've expected their clients or their clients' value-added resellers, their VARs, to do the work there. Um, we don't know yet. That's what I'm researching constantly to see what ERPs are doing. We do know, like I said, Acumatica made that acquisition. That's the most active transaction that's occurred. I'm having conversations with other ERPs. Others are having conversations with ERPs. It's a top 10 priority for them now. Finally, after years of us trying to kind of get into ERPs, it's become a priority. So it's exciting. It's a great time to be in business.
Has that necessarily become part of your sales cycle? Like, there are certain verticals that really lend themselves to digitizing or, making that transition. I think insurance, again, is one that is top of mind for me. But in order to make that sale, I mean, do you have to, is the pathway through the ERP, or is it direct the company and then you go backwards, figure out who they're using for systems, et cetera, and then make the integration?
It depends. Currently and throughout my career, I've tried to kind of go both ways and hedge my bets. I can say in the past where ERPs weren't interested in a conversation with companies like Iron Pay, a partnership conversation, they now are. So my hope is that, I have individual clients that are coming to us saying, we need you to work with our ERP. Here's how we need you to work with them. And we're developing solutions for them that, solve for those problems. But now the ERP too is willing to listen to that client, willing to have that conversation. And we kind of meet in the middle, and create, a brand new world for payments and for, certainly for distribution of functionality into the market that streamlines the process that is extremely antiquated. And it's really, domestic US, Canada too. We're really the only two, regions in the world that are still so check based. So it's something that is an issue around international payments, growth of companies into other markets. It's limiting factor, all of those different reasons to be excited about what's happening today.
When you think about B2B payments, I mean, do you think primarily do you contextualize it to North America, US and Canada, or is there also a lane there for the B2B cross-border? I mean, we hear there's a lot of noise out there about cross-border payments these days. There's a lot of noise about cross-border payments and the integration with stablecoin. Do you have any opinions on that? I mean, is that outside the scope of what you're doing on the day to day, or what Iron Pay is focused on, or is that part of your plan, your business model?
So we're partnered with two companies to offer cross-border payments. It is important to our clients. We just made the decision that building it ourselves was not the way to go. But yes, we are partnered for cross-border. It's incredibly important for especially a subset of our customers in manufacturing and other markets. So I do think it's important for your audience to have a partnership for cross-border payments if they don't already. A lot of other companies are offering cross-border payments through partnerships. I mean, Corpay itself bought a company called Cambridge a while back. That's who they use for cross-border. We are partnered with Monex, which is a large provider in that space. So it's certainly something, if you're evaluating a payments partner, you want to make sure they have that as an option. If you are issuing payments overseas, it's not something you want to have to add later, as that need evolves for your organization. That would be my recommendation for cross-border.
So for large corporates, I mean, it's kind of, you got to put together that package for them, that you're end-to-end solution provider for them, whether they're domestic or whether they are, have to make payments overseas.
Yes. I mean, it depends on the company size, if they want to,
Of course, yep.
or if they just want to go through a bank partner or someone else they're already partnered with. But it's, we've been talking about cross-border for 10 years now, and being one of the most important things to deploy. Now there are lots of options. There's plenty of ways to find the right partner for your organization. And so I would just, encourage you to do that. But it's not as daunting as it was 10 years ago.
And what do you, another topic that I wanted to touch on and just get your opinions on, or feelings on, was the role of embedded payments now in these tech stacks that these corporates are using.
So, the terminology embedded payments was first really discussed in consumer payments
Correct.
for years. It's crossed over into my world now. Really, how we are thinking about embedded payments today is, offering payment modalities, many different payment modalities that help meet the need of digital adoption of 60, 70, 80%, right? But then you're also talking about embedding other financial applications, like maybe some lending technologies. Potentially, certainly what we were just talking about, cross-border payments is something that's a part of embedded finance within fintech for B2B. Any of those other types of payment functions, we are adding those into our stack. So our stack is kind of a one-stop shop. So you come to us, and we're partnered with 5 different processors, with varying rates, also with the ability to make payments to different suppliers, based on what their requirements are. We talked about that, and that's primarily around the virtual card. And then we offer all the other payment modalities. So a company looking at rolling out, digital payments no longer has to decide on all of those modalities themselves. They could just come to us. We would integrate directly into their ERP or financial system, and then all of a sudden they'd have access to all of that, including cross-border payments, including, we are looking at launching a lending relationship that's transaction-based. There's a bit of noise in the market around, buy here, pay later, buy now, pay later, and what that would look like in B2B, whether it's through an Affirm type product or another product.
Is that versus like more traditional factoring type solutions?
Correct. and it
Okay.
would give us the ability to underwrite at the transaction level. So we would no longer be underwriting the entity, the company, we'd be underwriting at the transaction level, especially if it's a transaction or an invoice-based transaction that has a history within that organization. So we would look at the data around, paying that, facilitating that payment to that particular supplier for the business, and then we'd underwrite that transaction. So it's a different model altogether. But when you were talking about the opportunity in the market being tens of trillions, this is 10 times that, if we can figure out the right technology and the best way to approach it, because it's finally given companies a way to what we traditionally called factoring or supply chain finance that they did not or have not had access to historically. Because we're not looking at underwriting that middle market company or even a larger company. We're looking at underwriting that transaction. And you
Very,
give
very.
CFOs the ability to say, in real time, yes, I want this transaction is the transaction that I want to focus on.
When
Um,
you talk to companies, I mean, is CFO usually the access point? Or yes?
Primarily CFOs, for us, sometimes the controller gets pulled in, or other financial um, participants are pulled into the conversation, but it's primarily the CFO. That's where we start.
And if I were to ask you, and I guess this is a self-promotion portion of the the podcast. If I were to ask you who your, what's the profile of your ideal client?
For me, it's other AP automation and software solution providers. That's my ideal client. That's who I target. That's who I talk to the most. So sure, it's great to sell to a large Fortune 500 company, but that's even a smaller market for us than selling to an AP automation company that has billions of dollars in payments, for all of their customer base. So I typically target other software solution providers as my client base, and that's the prime. That's who our clients are at IronPay.
And your market outlook, if I'm to sum it up, is that you do anticipate a lot of activity along the lines of consolidation with the ARAP companies, in addition to the B2B payments firms.
Correct, and we're already seeing that. I don't want to call anyone out on this call, but we've tons of news has occurred in the past couple of months.
Yep.
As you probably know, Adam, just transactions that are occurring, companies getting out of the payments business, getting into the payments business, leadership changes, etc. So,
To the best of my knowledge, at least the press releases that I have caught, I mean, a lot of those transactions are strategic in nature. I don't know if this is out of scope for this conversation. I mean, but do you see or have you heard of financial sponsors, i.e., private equity, getting into this space and looking to make do deals and pick up either portfolio companies or bolt on smaller companies to existing portfolio company holdings?
absolutely. I mean, private equity has been involved for a long time. That hasn't changed. You think about FT Partners, for an example. I mean, they've been very involved in our space for 20 plus years. So private equity groups, are very, look, there's been some stuff that's happened in the past couple of months, but otherwise, private equity groups are extremely interested in AP automation, AR, the payments world. They're very involved in our industry. I work with many private equity groups, um, you know, every day.
People are getting a very good sense as to why I courted you to be an advisor to our firm. Um, I think one last question, because I read a piece that you had written. It was under the banner of the consulting company that you operate for B2B payments. And it spoke to the delta in valuations of certain types of companies in the publicly traded markets versus others. Maybe you could just share that with the audience, because I thought that was a terrific thought piece, well worth sharing to a broader audience.
Oh, thank you, Adam. Absolutely. So, if what I kind of wrote about and what I've consulted on and found in the past is that if a company, especially if they are a software solution provider, if they look at adding payments into their portfolio or touching the transaction in one way or another, becoming a fintech, well, then they're able to actually look at, the value of their organization and make changes to the value of their organization because they've now become a financial technology provider. They're not just a company that's making widgets. So if you'd like to know more about that, I would love to have a conversation with anyone that's listening to this podcast to talk, about what that means. It's extremely meaningful. It's relevant to some companies and not so much to others. So it does require, some work both within your organization and in order to determine if that's a possibility. But it's extremely meaningful to the value of your organization if you're able to do it.
Value creation and market perception and sentiment, especially if you're publicly traded. Or if you're private and looking to exit into the public markets, it's something you should certainly be thinking about prior to, and thinking about comprehensively, both in a deep way and a wide way, and having a clear cut strategy as to before you make that exit, how do you want to be perceived in
Yes,
that marketplace, right?
1,000%. I have had clients that, adopted payment technology before actually going public, and it had the most meaningful impact on their offering of anything else that they did 5 years prior. Same situation if you were an individually owned organization, you were a private organization, but you added fintech functionality in a meaningful way that could be directly associated with your revenue. Then if you were bought, it meant sometimes as much of going from a 3x to a 10x multiple. Extremely impactful.
And I lied. One last question. Um, Kind of a curveball, but it's a soft one, and it's right over the plate. Um, as you're well aware, you watch the markets. I mean, a lot of SaaS companies have taken it on the chin this year.
Right.
One of the main reasons for that is the just AI rolling out and creating efficiencies. And if these companies hadn't already implemented or put together a strategy to integrate this type of technology into their stacks, they're getting discounted for it. Do you think that those same companies by integrating or implementing some sort of payment strategy that turns them into a financial technology type player, do you think it mitigates some of that market perception, negative market perception that at least to date has driven down valuations in the public markets?
I mean, that's hard to say because I know the players we're talking about. And if
Right.
they didn't anticipate the impact of AI prior to today, then those are the companies you're already seeing having a negative impact that we're talking about. Also, if they didn't make certain changes to their payments platform that allowed for monetization of that platform over the past few years, especially. But if you were looking at the future, how you were going to continue making payments that you could monetize, if they hadn't made changes to their technology, they were behind the eight ball. And their clients are pulling away from them. Their clients are looking at other options. So the companies that have already looked at AI, just deployed AI actively going back for 3-4 years, and then have just added functionality as quickly as it came to market, those are the companies that are in a better position.
Yeah.
And then also companies like IronPay that have deployed technology and services that have allowed for us to increase our digital adoption of payments, our adoption still of new payment modalities that are digital, as well as keeping our legacy base of virtual card solid. If companies hadn't done that and they saw a real diminishment of adoption of digital payments in the last couple of years, those guys are in trouble, and they're looking to sell off their payment platform, or they're partnering with another entity to absorb it. We hadn't seen that type of activity at all until a couple of years ago. It was, we saw some changes around COVID, which was actually pretty positive, because people weren't going into the office anymore, and people finally realized they had to deploy some digital.
Everything went digital.
Everything went digital. So that was a boon for us to 2020, 21, 22. But now, those companies that thought they had a very long path in B2B payments are being cut short because they did not adopt AI technologies. They didn't adopt new modalities at the right time, all of those different things. So it's interesting. We're in a good place. We're very happy.
That's terrific. I cannot thank you enough, Sarah, for sharing your wisdom, your knowledge, your expertise. You have such a good sense of the marketplace. I always leave these conversations feeling like I've just got out of a college course on B2B payments, or whatever it is that you choose to talk about on any given conversation. For those who would like to contact you, aside from reaching you through the Wellesley Hills Financial website, how else would they get in contact with you?
So a couple of different contacts. I work through, of course, IronPay, S. Williams at ironpayinc.com. And then I do have a consulting company called Lakeview Payments, and that is Sarah at lakeviewpayments.com. And then my mobile number, I'm always accessible that way, 404-558-7604.
Very good. Very good. Well, thank you again, my friend, my colleague. I appreciate the time that you've given us today. I hope the audience appreciates it as well. Look forward to seeing you, I'm sure, this fall on the conference circuit.
Yep,
I'm sure there'll be a few that we run into each other. And I hope that people enjoy the content and do reach out to you, because I don't think there's anybody better in terms of the B2B space to speak with, especially if these real important, critical, strategic questions are coming up about, what direction they want to go with their company, especially as it relates to value creation and market perception. So thank you so much again for sharing. Great to see you again.
Thank you, Adam.